So in September, Barrick Gold merged with Randgold Resources, and it was an enormous merger. And only about 2 months ago, we had Newmont Mining buy out Goldcorp. And pretty much all the major, senior, large gold mining companies that are private, not the ones that are owned by government, but the private ones, are kind of hitting the wall here. They're in a big dilemma about what to do about their future, because their valuations are down, but they still need to replace their mined economic reserves. And in Barrick Gold's case, Barrick Gold's production in 2010 was 8 million ounces per year of gold that they were mining, and now it is down to below 5 million ounces per year of gold that they are producing. And the reason I'm doing this live stream show is that yesterday Bloomberg confirmed and Barrick Gold confirmed, which is even weirder, that Barrick Gold is actually looking at, after these large acquisitions were already done, these mergers and acquisitions, and by the way, they're not going too well, especially for the Barrick Gold Randgold Resources merger. I'll talk about that more in a little bit. But yesterday, Barrick Gold actually confirmed that they're looking at buying Newmont Mining, which is already larger, in a hostile takeover bid. So let me just read the article from Bloomberg. So Barrick Gold, the world's second largest gold producer, has considered a bid for Newmont Mining in what could be the biggest ever industry merger and propel the Canadian miner to the #1 spot globally. Okay, it's just talking about the share price. The share price of Newmont rose 3%. Barrick Gold slipped on these rumors. Barrick has reviewed the opportunity to merge with Newmont in an, quote, all-share, nil-premium transaction, end quote, but no decision has been taken, the company said in a statement Friday. So this is very unusual for a large publicly traded company to comment about a buyout rumor. So this was leaked somehow. Someone leaked this to Bloomberg. I doubt Bloomberg would have reported this without getting some type of confirmation. It's even weirder for a large gold miner that just did an enormous merger and acquisition in September to announce another one. So one possibility that Barrick has studied would involve teaming up with a partner such as Newcrest Mining in a bid for Newmont. People familiar with the matter said earlier. So, and there's a chart in here about, which I'll attach a link to the article about deal dilemma. Gold producer valuations fell after 2010 and 2011, so they've fallen a lot. So Newmont even commented on Barrick's interest or motivation, and interestingly, all these CEOs will all be in Florida next week for the BMO Capital Markets Mining Conference. In September, Barrick spent $5.4 billion in a merger with Randgold Resources, and that broke just ahead of the Denver Gold Conference. Okay, there's more to this article here, but rather than just getting into all the stuff, this would be an enormous merger and acquisition, but Barrick Gold is going through enormous problems already with the current merger and acquisition. Things are so muddled over there that, 6 months into this merger with Randgold Resources and the Randgold CEOs taking over Barrick, that they've had to announce a 5-year plan to fix things. And Barrick Gold, if you go to Seeking Alpha, there's articles about this. There's been a bunch of mining stock analyst downgrades of the stock due to problems with the merger and acquisition. And then on top of this, only a couple days ago too, there were rumors that Barrick Gold was looking at buying Freeport-McMoRan. There's even an article on this on Seeking Alpha about the rumors. So I don't know why Barrick is putting out rumors that after they've already done a massive acquisition 6 months ago, that they're looking at doing another massive acquisition of either Newmont Mining, which just did one too, or Freeport-McMoRan. Now, if they want to increase their gold production, again, it makes sense, but their balance sheet, Barrick Gold's balance sheet, is not sound. They still have a lot of debt on their balance sheet, and clearly they have not absorbed the merger with Randgold Resources yet. So they should not be piling on more problems for the company. Yes, hey Greg, this story broke on Bloomberg, and Bloomberg has 2 articles out about this in the last 24 hours. So it's very interesting that they're doing this. But from looking at some of the financial statements and stuff that's come out from all-in sustaining costs and financial numbers from Barrick, and remember, I did a video about Barrick Gold that their all-in sustaining costs, I had audio problems with it, that their all-in sustaining costs were nowhere near the levels that they claimed, because they were not reporting record free cash flow, and they were having their financial statements did not match the all-in sustaining costs that they're claiming. But in this main article, one of the mining analysts said that this combined company would, let me see if I could find the quote in here in the article real quick, skimming through it. Give me a second. Okay, so this is a mining analyst with BMO. He said in a research note Friday morning, simple math suggests a Barrick Newmont tie-up would produce more than 10 million ounces of gold a year at an all-in sustaining cost of around $900 per ounce. Well, that's on paper. So we don't know. Most likely, given my research and analysis and how other people have come out with the analysis of the mining industry, like Steve St. Angelo of SRS Rocco Report. By the way, Steve was supposed to be on a podcast yesterday. The interview, there was problems with it. Not with the recording, but booking it. But anyway, I was going to ask Steve, because I think overall that the largest miners for gold are kind of hitting the wall. They're having real problems at the mine site in terms of any more ability to find high-grade, low-cost projects. And the miners at the mine site are pretty much out of ways to cut costs because of the declining in grades overall industry-wide. I just hear CEO after CEO say that, you know, it's a total industry-wide problem. It's not going away. And this ties in with the research, the excellent research work of Steve St. Angelo, energy return on energy invested. I don't think any industry is dealing with the energy problems because how much of their input costs are reliant on diesel and oil prices than the mining industry. The mining industry has to deal with how they have to spend more and more oil, how they have to use more and more oil on uneconomic rock to find lower and lower grades to make any money. So that will permanently, if the demand for the metal is going to continue, you know, obviously if we have a 2008 crisis, the gold price, the silver price would temporarily collapse, but it wouldn't be permanent. Because long term, the industry just has structural problems where if they're going to produce a certain amount of gold per year, there's no way the price can go much lower. In fact, I don't even think the industry can survive at the we're at, let's see, when we're doing this live stream, we're at, sorry, I have a little bit of a cold. We're at 13.27 gold price, the gold market's closed, and silver just under 16 at 15.90. So these are a little bit better gold and silver prices, but the oil prices started to rally a little bit. So the oil price bottomed a couple weeks ago. Brent crude is up to $67.25 a barrel. WTI is up to $57.26 a barrel. So even though the oil price is still not super high, the mining industry has major fundamental technical structural problems with the fact that they have to use so much oil and diesel to move tons and tons of uneconomic rock just to find lower and lower grades of economic ore. And this is a structural problem industry-wide. Now, obviously, there's a few counterexamples here and there where a company like Kirkland Lake Gold, which had an old, unwanted mine, strikes it rich with exploration drilling, and then after years of a producing mine that no one wanted in Australia, they find the richest, highest grade gold find, 40 grams per ton gold, with exploration drilling. And now all of a sudden, it's the most economic mine in the world at Fosterville. But the odds of that, my point is that the odds of that happening at a bunch of other mines are very, very low. So the industry, the gold and silver industry, is in major problems. I think maybe Barrick thinks that the gold has bottomed and they're looking to increase gold production and sell that to investors, but they have not absorbed this Randgold Resources acquisition. And what they are trying to do here, and maybe do a hostile takeover bid with no premium to buy out Newmont after Newmont just bought Goldcorp, doesn't make a lot of sense. Okay, on paper, maybe increasing the gold reserves and increasing gold production makes sense, but from their balance sheet perspective and how they have not, from an operational standpoint, from how the Barrick management team has not efficiently absorb the acquisition of Randgold Resources, and there's tons of coverage now that's coming out from analysts and articles, and even the company itself, Barrick Gold, the new Barrick Gold, has released a 5-year plan to fix the problems with this merger with Randgold Resources that occurred 6 months ago. So there's already big problems. My point is they're trying to bite off more than they can chew Why are they wanting to go do another acquisition when they just did a large one, a $5 billion one, and they're already having problems with that? So I could see why they would want to buy more assets low and cheap, but their balance sheet is too leveraged and they're not operationally, they haven't fixed the problems with their last acquisition. So comment below what you think about the gold mining industry. Yeah, I think Barrick should wait, but it seems that their management team, because their chairman of the board is a Goldman Sachs guy, and it seems he wants to sell like this type of big, massive growth story that, you know, we added all these economic gold reserves and, you know, even though our annual gold production decreased a lot since 2010, oh, now we have a new plan and we're going to drastically grow our gold production again. That seems like that's the path that Barrick wants to go. I don't think it's the right path, but it seems that that's the path that Barrick wants to go right now. Comment below if you agree or disagree with that. Again, this is not financial advice. I'm just giving you guys analysis, my opinion. It's not financial advice, just my opinion. Stupid disclaimer. Okay, so we got a couple more things I wanted to cover in this live stream show. It's not going to be super long. Okay, I forgot to cover this in the live stream show a couple days ago. So the world's largest shipping company warns 2019 global economic outlook is worse than 2018. Denmark's shipping Maersk, M-A-E-R-S-K, is the world's largest shipping company, and it is thus safe to say that what it sees in terms of global trade is indicative of real trade conditions around the globe. This is a Zero Hedge article, and I'll attach a link to it if you want to read it. Which is bad news because in an interview with Bloomberg TV on Thursday of this week, shortly after reported dismal earnings, CEO Soren Skue, I probably screwed up that last name, said the global economic outlook for this year is looking bleaker than in 2018, which is affecting his business. And I think basically the share price of Maersk has tracked. Have you guys seen a chart of the Baltic Dry Shipping Index? I mean, it's totally collapsed, which is not good news for China because most of China's economy is still a export model, a very mercantilist, currency manipulated export model. Not that the U.S. doesn't manipulate currencies as well, but China's doing even more mercantilism than other countries. And as for the global economy as a whole, that is not a good sign, what the chart of the Baltic Dry Shipping Index shows. The other thing I wanted to talk about was a conversation with another libertarian about Amazon. And I really think that even the Mises Institute and a lot of libertarians don't really understand the history of corporations versus, you know, businesses in general and free markets and capitalism. So most people are unaware of this, and you have to start researching this on your own. But corporations actually preceded the Industrial Revolution. Okay, so the history of corporations, they started, a lot of them, especially the ones with like colonialism and European colonialism, they started before the Industrial Revolution, and they were government protected charters. So like Dutch and English chartered companies such as I'm reading from Wikipedia, but I've done additional research on this. Unfortunately, I don't think the Mises Institute for Austrian School of Economics and Libertarians has a lot of good research on this. I think a lot of it's mixed about corporations. So corporations, in the past, corporations, before there was Industrial Revolution and more relative free markets and things like that, corporations actually had tons of indentured servants. A lot of corporations owned slaves. And corporations were always protected by like the king's army or protected by the government. So like often they were developed, especially the initial corporations were developed with government or protection from like the monarchy. So like the king and his army, or they were like a separate bank so the king could get separate financing to fund a war. So like companies like the Dutch East India Company, the Hudson's Bay Company, you know, the East India Tea Company, those companies are some of the initial corporations. So corporations, I think we have to make, as libertarians and people who believe in the Austrian School of Economics, we have to make a distinction between, we cannot say that corporations are real capitalism or free market. They're not. They predated. They've always been corrupt and in bed with the government and government protection. They started off, like I said, as government charters. So a company like Amazon now, Amazon is not free market. Okay, Amazon is addicted to corporate welfare. They get tons, billions of dollars in subsidies, tax breaks. If they build a new headquarters, certain places, they get tax breaks from a state or local government. And often those state or local governments never get a return on their investment. So for issuing the tax subsidy, they never get the money paid back. So I'll give an example of this, and it's not necessarily with Amazon. Remember how Foxconn was moving one of their robotics, one of their factories with robotics to Wisconsin. And they built that factory, and President Trump was touting it, and Wisconsin Republicans and other people were touting it. And they were saying that that factory, that Foxconn factory, was going to create, all these jobs in Wisconsin. It was going to, I think it was supposed to create at one point 10,000 direct manufacturing jobs, and then there was the multiplier effect of putting a factory in there, how all these surrounding service sector jobs and the local economy was going to benefit. Well, so far, I believe that the Foxconn plant in Wisconsin, after only a couple years, it has only produced under 200 full-time jobs for Americans. And I believe that the state government gave Foxconn at least $3 billion in subsidies. So we have to, and before there were corporations, there was always business. Okay, there were always like shopkeepers and merchants and people wanting to do trade. And before there was actual money, there was actually like merchants would give like local people who they knew by face or reputation credit. So corporations are not real capitalism. They are not free market. They've always been in bed. The history of corporations, they've always been shady. They've always been immoral. They've always been in bed with the government. So as libertarians, we just do not make this distinction. I just do not see a lot of good articles and research covering this. So normally most of the articles, unfortunately, on like the Mises website and others defend corporations too much, but the history of corporations is very, very murky. Okay, I think I would disagree with the Austrian school economists that would defend corporations completely, because they started before the Industrial Revolution, and they started before really the average person had a chance at private property rights for the most part. Without going further into detail, but Amazon is not full free market. Amazon literally gets enormously subsidized cheap shipping from the U.S. Postal Service. The U.S. Postal Service gives Amazon like many billions of dollars per year in either discounted shipping, free shipping, or the U.S. Postal Service is taking enormous losses so Amazon can give you free shipping or give you one-day Prime shipping when you didn't pay for it. And ultimately, those losses then, because the U.S. Postal Service is not a private company, those losses go back to the U.S. taxpayer and also anyone who's saving in dollars or treasuries. Yeah, tortoise, there's a reason you haven't heard that about corporations before, because it does not fit the socialist, communist, totalitarian government narrative that corporations are capitalism, and so capitalism is bad. Okay? There's a reason you haven't heard the real history of corporations. Okay? Do a deep dive on this. I would really like the Mises Institute. There are people that are getting paid to do research and articles, and they are not doing this properly. And I don't have the time to do this. I spent over 8 hours on the Eat the Rich video, and it has over 200 likes and over 200 comments, with normally that type of social interaction in the past would have gotten me 10,000 views or more in a couple days. And it doesn't even, the last time I looked at the video, it doesn't even have 2,000 views. So one of my listeners, he seemed like a nice guy. He says, please, can you do more videos like this? Like the Eat the Rich video? And I could tell you flatly that I will never, never do another free video like that if I'm going to spend 8 hours or more of my time and I'm going to get no views and no money from it. It's just that simple. YouTube has made it very clear, the champagne socialists and Che Guevara t-shirt wearing rich people at YouTube and Google have made it very clear that if you say anything bad about socialism and you put all the research together and you show people the lies, that there's no reward whatsoever for all the time that you spend. I just don't have the time or the willpower anymore to spend that type of time on that type of research or video for free and get no reward whatsoever. I'm in shock. So if you go and look at other YouTube videos on other channels and you see that many likes and that many comments, videos do not have under 2,000 views. Especially, and my channel's not tiny. My channel's like medium sized. It's just messed up. This is a new normal now. So, you know, if I had gotten 20,000 or 30,000 or 40,000 views or more from that type of video, I would consider doing another video like that. But the return on my time is just very bad. There's no return on investment there. It's just not worth it anymore. I love doing these live stream shows and doing interviews with guests, but asking me for free to spend 8 hours or more of work to do something like that, and I know it turned out really good, and I'm very happy with it. And considering the resources I don't have and how it's similar to some of the really high quality stuff, I'd use 4 or 5 different programs to produce that video. That took a lot of work. I'm not bitching. I'm not complaining. I'm just saying that I put in the time. I wanted to put something out there that was probably the best of my abilities given the resources I had, and YouTube has made it abundantly clear that I cannot get a video to go viral and that I will not be able to make money from a video like that. And I think that YouTube even ran a Bernie Sanders ad, either on that video or the next video. They ran a Bernie Sanders political ad. Can you believe that bullshit? Do you think I would approve of that? Welcome to dystopia, right? I bash socialism and then YouTube goes out of its way to like stick me the middle finger. They run a Bernie Sanders political ad for 2020 on my video. Okay, well, I'm going to take a look at the listener questions and comments. I think I got most of the points across that I wanted to get across. But it is incorrect. It is historically inaccurate. You know, I never wanted to be a history teacher because, number one, it's boring and you read from a bullshit textbook where a lot of the history is inaccurate. But I did give you guys a little bit of a history lesson. So the history of corporations, there's actually, if you don't want to do all the reading and you want to see how corporations, kind of some of the first ones started, there's a great series on Netflix called If You Like Historical Fiction with some accuracies, but obviously there's a lot of drama that's added extra and fictional characters. But overall, a lot of the stuff about the time period is pretty accurate, is Frontier with Jason Momoa. And that's about the Hudson Bay Company and the fur trade. How the Hudson Bay Company was granted a monopoly by the King of England, and they had the British Army basically murdering anyone who tried to compete with them. And the Hudson Bay Company, not only were they murdering competitors, like executing them and either hanging them or shooting them with the muskets, they were also, they had indentured servants on their ships who were basically slaves for life. Like, poor parents had sold their kids into indentured servitude, and they actually owned, as part of the, you know, the corporations actually owned slaves, because that's when the sugarcane, there was like the slave, sugarcane, and I forgot the third part of there was the 3-legged trade back then. I can't remember it off the top of my head. It's been a while since I researched this. But, that they were integrating into the second season of the episodes, like the rum trade. So there was the fur trade in the U.S. that the Hudson Bay Corporation was running, and a lot of the frontiersmen in Canada and the eastern upper northeastern seaboard were involved in, and everyone hated the Hudson Bay Corp because they were this evil, chartered, government protected by the King Corporation. And then the Hudson Bay Corp was also involved in the rum trade and sugarcane in the Caribbean islands, and then I forgot the third leg of the trade. It might have been the slave trade. But it's a good historical fiction show, and Jason Momoa is in it for the libertarian ladies who listen to this podcast. Aquaman. Okay, listener questions and comments. Sorry, I went off on tangent there. Greg says, interesting, he had no idea Barrick Gold was pursuing Newmont. Yeah, I didn't either until the press release yesterday. And Bloomberg has now run 2 stories on it in less than 24 hours, which means to me it's being leaked, and it is, for some weird reason, Barrick Gold is adamant they want to do it, and I think it's very, very risky. They've already gotten a couple mining stock investment bank mining stock analyst downgrades on the Barrick Gold stock, and they're having enormous problems with their last acquisition. So from an operational standpoint and their balance sheet, it makes no goddamn sense to bring in potentially more problems and more mines that need capex. And the mining industry, besides the energy return on energy invested with the permanent oil costs, and they can't slash any more costs, the mining industry has to deal with really bad maintenance capex problems. The mines always have extra maintenance capex that you did not anticipate. Like something breaks down, or there's flooding, or there's just dozens of problems that can go wrong in a mine. So this is why value investors, regular value investors, will not touch mining stocks for the most part. There's occasionally a couple guys here or there, like an Eric Cinnamond, who is one of the top rated small cap value investors on Wall Street. And I've had discussions with him in emails. And he was telling me that for a short period, when there was total blood in the streets in 2015, he started loading up on gold miners. And all of his investors that gave him money to manage, they were telling him, like, they were demanding like phone calls every day and meetings, and they're telling him, what the fuck is wrong with you? Why would you buy these piece of shit businesses? Everyone knows miners are bad, too much capex, can never consistently make money. They never, they always overpromise and underdeliver. Their margins are never what they say. So this is why a lot more professional value investors and money managers don't buy gold mining stocks. But if you time the cycle right over like a couple year period, and this is not financial advice, but you can make good money. But mining companies in general are not long-term buy and holds, because normally in different parts of the cycle, they make enormous mistakes, or there's unexpected capex problems, and the margins and free cash flow, even when the gold price is higher, never as good as anticipated. We're going to find this out in the earnings reports coming out, if the rally in gold and silver and the relative low prices for oil and diesel have benefited the miners, but I'm skeptical whether or not the miners are actually going to be producing really, really good profits. But I know the miners have been, for some of them, have been taking big write-offs, so when the cycle does turn, they can have better profits. But operationally, some of these miners are still not having success yet, because I think they've hit a wall, like I've said, for how many costs they can actually cut at the mine, because the grades are just not there at a lot of these producing mines. Greg says gold has rallied with dollar retreat and China purchases. Well, I haven't looked at the dollar index in the last 24 to 48 hours, but the dollar index was still above 96, so I don't know if we can say the dollar retreated. Ridge Mouse says centralize all gold production before the big reset. So these governments won't make any money if they nationalize gold, because the gold price is not high enough. So maybe a couple of them will. I think instead what you're seeing is a strategy that Russia, China, and now Turkey are employing, where they are not letting any of their gold mining production leave their country. So they are using all of their own currency, either the ruble, the yuan or RMB, or the Turkish lira, and they are buying up as much internal gold production within the country as they can to diversify their reserves out of dollars. So I don't think we're at a point right now where we will see nationalization of any gold mines, but that may change years from now with a much higher gold price. The strategy seems to be for governments what I just outlined. Phil Kennedy says acquisitions can cover up problems. Just ask Enron's Jeff Skilling, who was released from prison today. Wow, I didn't know Skilling got released from prison. Yes, acquisitions do cover up problems. They also create new problems. Look at go look through the details of the 5-year plan that Barrick Gold has now highlighted for the Randgold Resources merger that took place 6 months ago. So both companies were so large, such large gold miners, that there was no way that there was going to be little or no problems with integrating the two companies. So there are enormous problems now with integrating the two companies. It does not make sense to me, as someone who's paid attention to the mining industry a lot for a decade now, for Barrick Gold to go and buy an even larger miner when they can't even handle the acquisition 6 months ago, and they're telling people that it's going to take 5 years to fix all the problems. Wellness81 says, wow, I need a molten gold fountain like that. Yes, I need a molten gold fountain like that too. And a silver one to match. And I would say a palladium one, but most people, palladium is a silvery metal, so you can't even... yeah, platinum and palladium are both silvery, or is it palladium that's the other darker color? Drawing a blank. But there's definitely a run on palladium, and it's a mess. So that market is broke. Vladimir Putin helped break the palladium market. Because he shut down Russian palladium production, and he refused to send the London banksters any palladium from Russia that they were relying on in the past. So apparently now the palladium ETF is being drained. So the share count in the palladium ETF is going up because the price is going up, and people are coming in, traders are coming in, bidding up the share price of the palladium ETF, but all the physical metal in the palladium ETF is being drained. This is totally ridiculous, but this is how perverse that market, and I'm using air quotes, is. Hello, Greg. Yes, you're correct. The Postal Service has run a debt for decades, and it has enormous unfunded liabilities for pension fund plans. The Postal Service will not be profitable. It's going to continue to run losses, but the point I was making was that Amazon is taking advantage of this and actually making things even worse. So you have, Amazon is a parasite, okay? Amazon is the e-commerce online digital version of the Standard Oil Trust. So Amazon is such a big parasite, and they're so good at corporate welfare and subsidies and all these other things with their army of lobbyists and tax attorneys and tax accountants, the best that money could buy, that they are literally increasing the losses for the US Postal Service, and Amazon is making more profits because of it. The average American, if you brought up how much money the Postal Service is losing and how Amazon is the Postal Service's biggest customer, may not even know that. Hello, Benjamin asks, will I be moving my content to Patreon? I'm honestly not sure yet, so it'll either be behind a paywall on my website or on Patreon. I honestly thought I would have already had another competent business partner or partners. I had a deal done, verbal agreement in January of 2018, and I was taking it to a lawyer, and it just didn't, the other person just didn't do what they said and walked away. And I even spent like $600 on a last minute plane ticket to fly down to North Carolina, and it still didn't work out. So I tried my ass off, months of negotiations, thought I had a new business partner, and it still blew up in my face. So if I would have a competent new business partner or partners who could help me with marketing or billing or the content management and payment system, I could do the content easy. I really need someone. I'm burned out and tired at this point, and angry and frustrated with everything going on in my life with the health problems and other stuff. And I would really love to find a competent business partner where I could delegate some of the stuff to. Because let me tell you, trying to do errands and all this other stuff, like 20 or 30 things in a day, and then doing work all by yourself is just overwhelming. Vibin asks, what are your thoughts on the dollar milkshake theory put forward by Brent Johnson? Is US dollar... Okay, so with the strong dollar, the dollar rally could continue because other countries have weak currency and have enormous financial problems as well, and their central banks are doing problems. So on a relative basis, even if the Fed does some QE, if all the markets start to collapse, there will be managed money from Asia, Europe, emerging markets, and maybe even Japan coming to the US into dollars and US treasuries. So the dollar, on a temporary relative basis, by money managers who manage a lot of money, the dollar and treasuries are still considered safer. So there could be a dollar rally continue, but like I've said for a long time now, basically the longer that the budget deficits grow and all these other, and the Fed's balance sheet increases, the more rope the US is being given to hang itself with. But none of these major economies are doing a good job. They're all screwing shit. Japan is a mess. The European Union's a mess. China's a mess. Emerging markets are a mess. And the US is a mess. Now, the US is being given kind of a temporary pass until one of these other major things collapses. I should probably avoid dating questions and stories. I occasionally slip them in there. I know some of you like that. I'm seeing all these MagTow posts in the comments section below. Below my videos. Okay, Phil says, YouTube gave my Bernie Soviet announcement 5 dislikes immediately after upload. Yeah, that sounds right. The people in Silicon Valley, a lot of them are enormous hypocrites. So a lot of them make 6 figures or more off some type of capitalism, small amounts of it, or business, and yet you see them wearing Che Guevara t-shirts or Karl Marx. They can quote Karl Marx chapter and verse. I've seen pictures of YouTube employees with very, what's the right word, weird references to communist propaganda, like t-shirts. So I've seen pictures of that. So these are guys that are making high 6 figures or 7 figures and driving nice cars and spending money like crazy, champagne socialists, and they're wearing like Che Guevara or worse Marxist t-shirts. Manuel says slaves, molasses, rum. Yeah, that's the trifecta there. And there was also the fur trade. There was the pelts and fur trade. So if you want to get a general idea of how anti-competition, anti-free market the initial corporations were, watch Frontier on Netflix. But as libertarians, I think we have to make a big distinction between these big evil corporations that are in bed with the government and then get the red tape, the rules, the regulations, the bureaucracies to raise the regulatory hurdles or taxes or fines that they can pay to protect themselves from competition. And I have mixed feelings about patents. So the patent issue in the US is complicated, but there's a lot of technologies, like basically all of Nikola Tesla's like ionosphere free electricity innovations and the liquid fluoride molten salt thorium reactor and many other good technologies that have been blocked by big corporations and the patent office. So Tesla was going to advance his technology of free unlimited wireless electricity, pulling it from the ionosphere, and then JP Morgan and maybe some of the other bankers and Thomas Edison also sabotaged him and his research and company at one point. Because remember, Tesla worked for Thomas Edison, and then Tesla was the one who was recommending direct current. Excuse me, I got it backwards. Tesla was the one recommending alternating current, and Thomas Edison said direct current, and Tesla was right, and Edison was wrong. And Thomas Edison, even though he had General Electric, he hated Tesla, and he went out of his way to ruin Nikola Tesla's life. And Tesla was getting a lot of research and development money in a small little company, and then all of a sudden, all of his research, all of his funding was pulled, and he died like a broke and penniless man. He was totally ruined. There's documentaries on YouTube about Nikola Tesla if you want to learn, but he was doing research and innovation with very poor equipment compared to scientists of today that scientists of today cannot do. Kenneth asks a good question. What area of the global economy do you see crashing first and its impact in the U.S.? Corporate bonds, emerging markets, the U.S. consumer discretionary spending. So I think restaurants and shopping malls and these bricks and mortar retail stores, a lot of them will have the worst. Now, there will be some that will buck the trend. So it seems that consumers, I see a lot of women not wearing jeans anymore, so the jeans companies are even switching to stretchy fabric, like stretchy type of jeans that are kind of a hybrid fabric, or more yoga pant stuff. So Lululemon seems to be routinely bucking this trend. I see a lot of women just wearing like yoga pants and leggings everywhere now. So that seems to be a new trade. But the consumer, from what I am seeing and the earnings reports, the U.S. consumer, even rich people now, are trading down to Chipotle, Mexican Grill, and Domino's Pizza. And a lot of the other restaurants are losing business. So I think, you know, with on the conference call, you heard the Domino's Pizza guy a month or so ago say that everything is great with them. Well, to me, that means that people are trading down from eating at other restaurants and instead they're ordering Domino's. And same thing with Chipotle. So that is a red flag to me about the economy, that the other restaurants are not doing well if Chipotle and Domino's are doing well. Yeah, Manuel, I corrected myself. Yeah, Edison was direct current and Tesla was alternating current. And Edison, actually, there's some videos out there on YouTube. Edison went out of his way to try to ruin Tesla's life. Okay, well, there's a bunch of other questions and comments. I do have a sore throat. I have a little bit of a cold, so that's why my voice is a bit different. And I wanted to do, this video about Barrick Gold and just get it on the record there that I think this would probably be a bad idea for them. They should have gotten their shit together with the Randgold Resources merger and acquisition first and fix those problems first with the resources they have. They already have a lot of debt. They should not be bringing new mines into the fold that they may or may not be able to handle the capex on those mines when they already have a lot of debt. After they had the debt before the Randgold Resources acquisition, but now they still have a lot of debt and they have more mines that they have to fix with the capex problems. Okay, guys, well, that's it for now. I'm going to take a break and I'll talk to you guys later. If you have not seen my Eat the Rich video, it is really good. I spent a lot of time and hard work on it, and it just doesn't have many views. But thank you so much for the likes and the comments. And screw YouTube, because it should have way more views than that. Okay, bye.